What's going on, guys? Just a real quick video today. This is going to be on pattern recognition. Now, I spotted this image here on social media, and what it is the ASX 200 on the daily chart, and then we've got the ASX 200 down here from 2008 and 2009, which is obviously when the GFC happened. So this person's trying to predict what the price action is going to look like based on history. Now, someone replied to this and put in their own prediction and colored in green. They just said, well, this is what I think is going to happen. And funnily enough, this is probably a more accurate depiction of what could happen, which is literally anything. So there's a common misconception, particularly among newer traders, is if you find some sort of correlation, association, basically anything from the past in different sectors or different stocks, that it's going to influence price movement, that it's a good predictor of price action, and it just isn't. So here's an example of where we got Tesla on the left and we got Bitcoin on the right. So this is the recent Tesla price movements, and then we've got a very old 2016, 2017 price action from Bitcoin. And you can see the data points, they're pretty bang on. The association is very, very similar. But here on the left side, Tesla shoots to the upside, and on the right, we've got Bitcoin, which crashes to the downside. Now you've got hundreds of thousands of charts available to you. Not only daily, weekly, monthly, but you've got the hourly chart, the 4-hourly chart. You can associate different stocks, different commodities together from different time periods, different time frames, and you can still get very similar patterns. So you can have Tesla on, I believe this is the daily chart, but you could have something that's on an hourly chart and compare it to a monthly chart. I mean, these can look very similar. You can definitely find a chart like this one on the left on a monthly chart, and on an hourly chart, and on a 1-minute chart. It exists somewhere. It's just a matter of finding it. Now, it doesn't mean there's a correlation or association between this commodity and this stock. It just doesn't exist. We got CBA here, so we've got a bank. And that's between 2012 to 2015. So that's a 3-year time period. Then we've got gold here from 2006 over here at number 1 to 2009. Completely different time periods. And yet the price action is very similar. And this is probably why you get it. Let's say this move from number 1 to number 2 is at 38.2. So it pulls back down to 38.2. That would explain this price movement and this price movement on gold. That wouldn't be surprising. But that doesn't mean these two have any association whatsoever. It's really important to identify that, because as human beings, we are fantastic at pattern recognition. So in cognitive science, in neuroscience and psychology, the definition of pattern recognition is being shown a stimulus and associating that stimulus with something in our memory. So if I was to say A, B, C, D, E, F, G, you know that H, I, J, K comes after that. You identify that pattern. That's the alphabet, obviously. So you know what comes after it, because the stimulus is me saying those 5 letters out loud, and then you continuing the pattern because you've identified where that comes from. So people try and do that with charts. They try and see a historical pattern of what's happened in the past, and it just doesn't work. There's no correlation or association between historical charts. There just isn't. At some point they'll deviate, but you've got so many data points, because all charting is buying and selling, support and resistance. You know, you've got Fibonacci for how much the pullback is. You've got the VWAP. You've got all these tools, and eventually something's going to line up somewhere. You've got hundreds of thousands of charts, different time frames, different sectors, and you're going to find a pattern somewhere. It will exist, but it will deviate as well. It'll only follow it up to a point in time, and it'll eventually deviate. So guys, do not try and pick patterns from the past and say that this is what's going to happen. It doesn't work. Technical analysis doesn't work like that. Technical analysis doesn't look at historical chart patterns and say this is going to be a repeat. It's not what it is. It's not a crystal ball. Technical analysis is looking at a chart at a given point in time and saying, here's what you should do if price goes to X. You do A, B, and C. And here's the statistical likelihood of it happening. You know, let's say on this chart here at number 5, it pulls back down, and you'd say at horizontal here at $80, that would be a good point to short. There would be a high probability of shorting at that point in time and making profit. You don't look at this chart and say, oh, let's look at gold or let's look at some other chart and, oh, it went up, therefore this stock will go up. It's ridiculous. It's nonsense. It's not how charting works. So guys, if you find any of my content useful, please drop by my Twitter page at demoniaco.au or my Patreon page at ASX Tutorials. Thanks, guys.